Hello, I'm Helen Cowley, a tax partner at UHY Hacker Young in Manchester. I've practiced in tax for over 16 years now, advising mainly entrepreneurs and owner-managed businesses in a variety of personal and corporate taxes. A key part of my advice is always to understand the client's overriding commercial objectives. Now, for the last 7 years, I've had a very keen interest in international tax services. I really enjoy helping businesses to enter new global markets, and I frequently liaise with business advisors all over the world to help businesses enter those markets. I know it's easy to identify international tax with the large multinational companies, the likes of Google and Amazon, but you may actually be quite surprised by just how many owner-managed businesses are affected by global taxation. When I advise on international tax, there are 3 key areas to consider. So the first one is corporate income taxes. Now, very generally, a company will pay corporate income tax in its country of residence. So, for example, your UK company will be registered in the UK and resident in the UK, and that's where it will pay taxes on its worldwide income. But you may also have a requirement to register in an overseas jurisdiction if either your central management and control is located there, so typically a board of directors making the highest levels of decisions on behalf of the company, and also if you have a fixed place of business in an overseas territory, that could also give rise to a corporate income tax registration. And it can affect VAT as well. It could also mean that you have a VAT liability in that country or a sales tax registration requirement. So that's the next point really. If your company is providing goods or services in a foreign country, then it will be really important to assess whether or not it has a requirement to register there. For example, this could be the case if you hold goods in a warehouse in an overseas territory. And finally, we look at people. So if your company sends employees to work overseas, even on a short-term contract, then there may be a requirement to register for payroll taxes and for the company to pay social security contributions in that overseas jurisdiction. That's just really an overview of the 3 key areas to consider. In my next video, I will mention a little bit more about the common issues that arise when trading internationally. For the time being, I would simply say that if your company is considering trading internationally for the first time, that it's really important for you to take advice both from a UK tax perspective and also from an overseas tax perspective, also obviously taking into account any legal issues. Thanks for listening.